Or I can just do this. Oh, it's recording.
Is it? It shouldn't be yet. Oh, probably because the time has started. So it is recording now.
This
And
isn't going now.
we can pause it until everyone actually starts jumping on. All right. We're going to go ahead and Mr. Edward is about to jump on. Hi, Edward. How are you?
Hey, Denise. Doing good, doing good. How about yourself?
Good, good. Thank you. Thank you so much for being here with us today. So just to give you a quick intro so everyone can learn who you are, this is Edward Araujo. We've been working together a few years now. He was one of the first contacts that I made when it came to credit repair as a realtor. And a background story, Edward, I'm not even sure if you're aware of this. I had been working on getting my credit repaired for a couple years prior to actually becoming a realtor. So I actually went through a few companies before I found Edward and his company. And this is really one of the reasons that I do value him as a partner, is because I got to go through a few companies before trying out their company. I have used his company personally. I've used his company with several of my clients, and by far they have given us the best results. I think their fees are very reasonable, great customer service. So as I always tell you guys, I'm not going to recommend anybody that I haven't either personally used myself or comes highly recommended from somebody that I trust. So without further ado, Mr. Edward Araujo, thank you again for joining us. Can you tell us a little bit more about yourself?
Yeah. Well, thank you. First of all, thanks for having me, Denise. Like I said, we've worked with each other for a few years, so really appreciate it. So my name's Edward Araujo. I'm the president and founder of Texas Consumer Credit Services. I'm a board certified credit consultant. Been doing this close to 15 years. I'm also a published author. Wrote a book on credit, and I really just I'm all about credit, and really more when it comes to the real estate industry. And this is really what I like doing, believe it or not, is like the education part of it, especially with realtors, consumers, and just kind of getting the word out there about credit and everything around and how it works, basically.
Yeah. So can you, so most of our agents, I had kind of mentioned this to you before, most of our agents are brand new agents. Some are a little more senior, but, and we talk about this from time to time. I think we really, as realtors, even though nobody really tells us that we have to know credit, we really do. We have to have a pretty good, solid, general understanding of credit, because what I find, at least with a lot of my clients that are struggling with credit, a lot of times it's just getting them to go to you for that consultation. And sometimes I need to be able to have a little bit of information to give them first before they'll actually come to you. So what exactly is our credit, and why is it so important?
Okay. Great question. So credit is super important, as you know, and credit is very old. It goes back to times when people were trading, and it actually started out by like a blacksmith and these different trades making a list and saying, hey, if this person's on this list, basically don't give them credit trade, and then it's evolved to what it is now, which it's basically it's a number, right? Your credit score is a number, and that number determines your risk level. Okay, basically the chance of you defaulting on a loan. Okay, and your credit is made up of 5 main parts. Okay, so just real quick, the 5 main parts are: you've got payment history, you've got indebtedness, or what's usually called your utilization, you've got your age of credit or history, and then you've got mix of credit and new credit / inquiries. Okay, so those are the 5 main parts. And then obviously within those parts, there's some nuances to it, but that's generally what creates your score. And then obviously, as you guys know, you scores mainly go from 3 to 850. And then, like you guys know, your client needs to have a certain type of credit score to even qualify. Okay. So your credit report, like we were talking about before, is like your adult report card, right? It's going to determine, should we let this person borrow money and obviously for a home, it's one of your biggest purchases. So it's really in-depth. A credit check and an approval for a mortgage is a lot more in-depth than if you're going to get a cell phone, obviously, right? So that's why it's super important that maybe you all not be experts, but have a good understanding to be able to make that intro or give pointers and tips to the clients. And then if it's something that they need help with, know where to point them and be able to walk them and help them through that process.
Right. And that actually kind of reminds me of another reason that it's so important is this is our productivity team. So anybody that's partaking in these trainings right now, they're trying to become more productive and more efficient with their time. I always talk about be more efficient with your time. Every minute counts. And so one of the ways that we can become more efficient and productive with our time also is if you have a good understanding of how this credit score affects your client, then you know which direction to point them in. So for example, we're talking about credit and it being somewhat of like an adult report card, right? And for us as realtors, we need their report card to reflect a certain number. And that number right now, really guys, lenders are not taking less than a 640 right now. Ever since COVID, they can tell you that they'll take 620, but it's going to be very hard to qualify somebody with a 620 right now. Lenders don't want to take a 620 credit report. They want to take a 640. So, so knowing, okay, well, let's say they're not at a 640. Let's say they're at a 620. Is there something that we can do to help? Let's say they're at a 500 or at a 520. Like, where does that position them? Because you also have to know which direction to point them in. So what would you say is like the ideal credit score that needs to come see you? When should they come and see you?
So we normally deal with cases that are a little bit more severe, right? When someone is not borderline, they're, low 500s, high 400s, mid 500s. If they're somewhere in the low 600s, there's maybe a consultation is still great because there may be just some pointers, but clients that actually hire us have some more severe issues. So it's really hard to tell. There's no like blanket answer on, when people ask me all the time, how can I improve my credit score? Because it really depends. But there are some general guidelines that you all can look for if they're borderline to see. So one of the biggest things that people don't realize, it's the second biggest part of your score, is your credit utilization, your credit card utilization, okay? So that's your credit card limits in relation to your balances, okay? I've seen scores fluctuate 50, even up to 100 points just off those balances. No late payments, nothing, just those balances. So you hear a lot of times you don't want to use more than 30%, right? So if it's a $200 limit, no more than $60, that would be 30. But ideally, if you're trying to squeeze out some points, you want to get that under 10%. Okay. So we have a rule of thumb with our clients is you take a zero off of everything. Okay. So if your card is a $500 limit card, your actual usable limit is $50. And you have to train yourself to that. Forget 500, just think you only have 50. Okay. So just by doing that, that's one of the first things we look at on a credit report, right? If a lender sends me or you send me a report over, I'm gonna look at that real quick because that's the quickest way. When you pay that, as soon as the credit card company reports that could be, 30, 45 days, that score can change, okay? If it's other things, derogatory items and things, then that's something that will need a longer consultation and a little bit more of analysis to see. But that would be the number one thing that I would look at on a credit report is, do they have credit cards? And if they do, what do those balances look like in relation to the limit? And then from there, you can maybe develop a game plan of how can we get that ratio down, because it's not the limit, it's how much of that you have. Because you can have a $20,000 card and be maxed out, and someone can have a $200 card and have a $20 limit, and that's going to have a better credit score because it's the ratio. You don't have to have a super high credit card. It's the ratio of that credit that you're using. So that's one thing that I would tell you to look real quick, and one thing that is kind of a quick fix.
Yeah, and that's something that a lot of times comes up with potential buyers, that they actually volunteer that information to us kind of from the beginning. So if you are prospecting for buyers, I don't know about you all, but at least for me, one of the biggest obstacles that I have to overcome is their credit. A lot of times buyers are afraid to apply, just to apply, because they don't believe that their credit is good enough. So typically, if they give me some type of resistance or hesitation because of their credit, my next question is, well, do you know what your credit score looks like? And they usually will give me an answer to the effect of, well, I haven't checked it in a long time, but the last time I checked, it was about 550. And for me, when I hear 550, well, it sounds like a horrible score to a lot of people, especially to that person. To that person, that sounds like a horrible score. But in reality, like you said, that's really your target clientele is your low to mid 500s. And I've
Yes.
seen low to mid 500s get a very good results from the work that you all do.
Okay.
So we talked about utilization a little bit, and I think that was a great tip. So that's good for you guys to know for your credit cards, and it's good for you to give that rule of thumb to any of your clients that are right at the edge. You know, if they're in the high 600s already and they need a little bit of a boost, you can ask them, well, what does your credit utilization look like? You know, how much do you have in credit cards balances and the actual debt on it? And you can tell them, well, if you drop that down to the 10%, that should give you a bump up in your score. So a lot of times they don't want to run their credit because they know that they're only 10, 15 points off. They just want you to tell them what to do. That's a great tip. Now, what about payment history? This is another one that I see gets a lot of people. What's the importance of the payment history? What are you looking for? How does that affect us?
Okay, that is a great question. So remember we said those 5 parts? So if you think of a pie chart and you break it down percentage, it's 35, 30, 15, 10, and 10%. Well, the biggest part of that is your payment history. Okay. So yes, late payments, collections, charge-offs, those have the most impact on your credit score. And then it's going to depend on how recent, how many, and how severe. Okay. So obviously 30-day late payment is not as bad as 2, or not as bad as going 60 or 90. And then, you know, how many of them, if was it within the last 2 years? And then after that, you get into your severe accounts of most people have collection accounts. Okay. So those are the biggest things. Now, when people have those issues, that's technically more likely when we come in. Okay.
Mm-hmm.
Because here's the thing, once an account goes to collections, or once you're late, that's on your record. Whether you pay the collection or once you get current again, that's great, okay? But it's still on your record. Think of your credit report as just a record, like your driving record. You can get a ticket and go pay it, and you're not gonna get a warrant, right? They're not gonna come after you, but it's on your record. It's gonna affect your insurance. That's what happens with collection and late payment. So a lot of people think, well, I got a collection, a client will come to me, I don't have any negative accounts, pull the report. Well, they have 5 collections, they're paid, okay? Which is great. If you can pay them because you can still get sued and collection letters and all this, but that doesn't help your credit. A paid collection and unpaid collection impact your score the same exact way, believe it or not. Okay. A late payment, sometimes people will be like, I don't know what's going on. They're current on everything now, but they had a hiccup like with COVID, we're kind of seeing going on now. They went late 3 months. Well, guess what? A 90-day late payment impacts you for about 7 years. Okay. Ooh. Yeah, a 30-day, about 2, 60 days, about 5. And this is roughly, right? Because it's not like a set in stone, but that's a 90-day late is one step before collection, okay? So that's where they would come to us, and then our job is to try to legally fight for repair, reversal of late payments, or deletion, complete deletion of derogatory accounts. And that's what I can explain to you later on how that works. But yes, late payments. So a lot of times when they tell you, well, I don't really have anything, you may want to ask them, well, have you had anything, you know, in the past? Because then they'll be like, well, yeah, I was late a couple months back and I had some collections, but I paid them. Okay, that might still be impacting you. Mm-hmm. Okay. Yeah. When they tell you about your credit score, I'm just going to go back to this real quick, Denise. Has anyone's client ever told them that their credit score is a 650 and they go to the lender and pull it and it's a 580? Has that happened? If it hasn't happened to you yet, it's going to happen probably, right?
Yes.
And the reason that happens is because we have hundreds of credit scores, believe it or not. Okay, we've got different versions and different models. And it's not that one is right and one it's wrong. It's just that there's different versions. If you apply for a house, a credit card, and a car, same time, right now, they're all going to be different. Mm-hmm. Okay. Mortgage lenders, what's important to you all use a specific FICO version that's over 20 years old. If you look at a tri-merge credit report from your lender, it'll tell you the exact version. It's like FICO 2, Classic 4, and Beacon 5. Okay, so it's a little outdated. So those scores tend to be lower than newer score versions. Newer score versions, for example, don't weigh medical or don't weigh like student loan. They weigh things different because things have changed.
Mm-hmm.
So it's always important to, if they're borderline, obviously you want to have the lender pull it to see, you know, where they're at. All scores are good because they're going to give you an idea. And I tell people a lot of times not to focus so much on the score, but the health of the credit report.
Mm-hmm.
Okay, fixing those things is going to improve your score. It's just going to depend on what scale. So your score doesn't change. What changes is the scale. Like your weight doesn't change. It's the scale you're weighing yourself on. You go to one place, you weigh on another one, you're like, whoa, I'm 10 pounds heavier. No, you're weigh the same. It's just a different scale. So the information in your credit report is the same. It's just what scale are they measuring it on. So we need to fix those accounts to make the credit report healthier.
You mentioned the FICO. Can you explain what the FICO is? Because that's the school. That's the FICO number is the number that the lenders are looking at, correct?
Correct. So FICO is a company, Fair Isaac Corporation. Okay, it was developed by two people back in the 1950s, Sir Isaac, and it was like a mathematician and engineer. But the important thing is that, so FICO, your credit score is an algorithm. It's like a formula. Okay. FICO gets its information from the 3 credit bureaus, okay? So they pull all your information from Equifax, Experian, TransUnion, they put it into this formula and it spits out a score, okay? So for the FICO mortgage version, there's certain things they say, okay, a risky person for us is someone who has this, 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 and this, and this. So they take all that information and that's how they generate the score, okay? So really, mortgage lenders are the only ones that can pull that score unless you go to myfico.com and you got to purchase the report that has all the versions. And then you'll see like your FICO 8 auto, FICO 2 mortgage. You have all these different scores. Okay. So that's really the only way to get close. So I tell people to focus on the parts of those 5 parts of your credit. But yeah, so FICO is the most widely used. Okay. And it's the one that mortgage lenders use. Vantage is what you see like on Credit Karma and some of these things, and it's getting a lot of traction. As a matter of fact, they're trying to get some legislation to where mortgage companies can use it. And the reason it's FICO is because, you know, most loans are, like FHA, right? They're government backed. So they require them to use a specific proven and tried method, but they're trying to change that because things have changed in 20 years. There's people that are worse of a risk that shouldn't get one that do. And there's some people that actually a better risk but that don't appear like that on paper. That should, so they're trying to change those algorithms. But when it comes down to it for you guys, you just kind of have to know. Like my book is it says how to win the credit game, and that's kind of what it is. It's just we need to know how that score works so we can know what to do to increase it. Because I've had clients tell me, oh, they told me just to max out my credit card. I'm like, well, that's farthest from the truth, right? So they just don't know. A lot of times people just don't know. Like, well, I can pay it off today. I just thought I should have it maxed out. Right. So it's really that we don't know. They don't teach us this in school. Right. My son, I think, knows more about credit than a lot of realtors probably because he hears me every day and I'm talking about that. And credit plays such a big important in what you all do. Right. But yet there's so much misinformation and a lot of unknown. So it's really important that you try to educate yourself. Again, you don't want to be the expert, just like you don't want to be the mortgage expert. Right. But you want to have an understanding to kind of, tell them, okay, this is kind of what you're looking at. You might want to talk to this expert to see, where you're at.
Yeah, I couldn't agree more. I think you said it best. And that's really what we're trying to do here is give you guys a very solid base of knowledge on credit because you have to have it. Again, how many times do the clients come to us first and they ask us credit questions and they expect us to know? And you don't have to be a credit expert, but you should have a solid base knowledge to at least make them feel comfortable enough to trust you and to take the next best step for that person. So sometimes the next best step is, well, based off what you're telling me, you really haven't had any late payments. You've had your credit for a while. The last time you pulled it, it was around a 600. Maybe we should just get you to the lender to pull your credit and see where you stand because it sounds like you're borderline right now. And a lot of times just the lender can see you know, their utilization is a little high. They need to pay down their credit cards. I know a lot of you realtors have gone through that. The lender will come back and say they just need to pay down their credit cards, and that's it, and we're good. But sometimes a client will come to you and they'll say something to the effect of, well, I lost my job a few years ago, and so I had some hardship. We ended up repossessing the car, but I got that taken care of. But that was about 3 years ago. I don't think it's affecting me anymore, but I know that my credit took a hit. You know that there has been some hardship 3 years ago in the credit world is recent. It's still pretty recent. It still can hit them pretty hard. I have 30-day lates from 2 years ago that still hurt me so bad. Like, I'm surprised at how drastic of a hit that is. I'm like so ready for that to be over and done with. And I just thought, you know, once it hits that 2 year, they'll fall off and they won't affect me anymore. And like you said, it's really more or less, it's not very black and white either. But
Exactly.
when you hear that they've gone through some form of hardship, they lost a job, this is when we can point them in Edward's direction, because he's the expert at that point. Somebody that comes to you with a 500 credit score, we're just not set up to help these people. We're not the best person to help them. You can give them little tips and tricks here and there, but little tips and tricks is only going to bring their score up so much. If the objective is to get them to qualify for a home, it might be a 1 year credit repair process, but without repairing their credit, they will never buy a house. It has to happen one way or another. So,
Exactly.
so the next step in a situation like that is to refer them over to credit repair. Now, I'm pairing you guys up with a dear partner of mine, somebody that I trust my clients with. So give them a shot. And what does it look like whenever we send you a client? What does it look like on your end? What happens at that point?
Okay. So the way we prefer to do it, and I can give you the link or we can post it in the chat later. We have an online form that we supply our partners with. It's submitmyclient.com. It's an online form that most of my partners save on their phone. And all it is you go in there and you just tell your partner, you know what, it may looks like, you just don't, never say no. You just say, you know what, you don't just qualify yet. Okay, let's set up you up on a plan. Let's get you with the right people. Do you mind if I just go ahead and send over your name and phone number to it's one of the people we work with? They'll reach out just for a free consultation. Just hear them, see what we can do. So you put their name, their information in there, if your email, and then on the bottom, you input your information, okay? When you do that, it's gonna come into my system, into my team, okay? When it comes to us, we're gonna reach out to them and we're gonna speak to them about their situation, right? We're not gonna call and say, hey, you need to sign up, or hey, we just heard you got a 500, because there's some privacy things. And that's what we do. We specialize in dealing with the real estate industry, so we got you guys covered in that area, right? But the reason it's important to do it through the form is because then that client is attached to you. Our sole purpose is to get that client back to you and get that client into a home, and hopefully you sell them that home, right? So when you send it, they're attached to you. So anything going forward, any communication with them, if we have a consultation, if we don't, if they enroll, you are copied on and you're kept in the loop, okay? If they actually do enroll for services, then we set you up with a partner portal that you can log into, and it's kind of like another CRM, and you have all of your clients in there. Okay, so that's like another pipeline. And that's important because I've had clients be realtors be very successful to where they're putting everyone in there, right? And after 6 months or so, now they got a whole other pipeline of clients that are coming back now ready, in addition to the ones that are ready to go now. And those clients are the most grateful, okay? So they come in, you get your portal, you're tracking them, you get status updates from us about every 40 to 45 days as we're getting results, until we get them to the point where we think they can qualify. We close up the case and get them back to you all, which on average is 6 to 9 months, okay? Now, have I had clients done in 45 days? Yes. Have I had clients take a year? Yes. It depends. Remember, every credit report is like a fingerprint. Everyone is unique and different. But overall, on average, with thousands of clients, it's 6 to 9 months. So as a general rule of thumb, I always tell clients to prepare for 6 months, okay? We're very transparent. That's one thing you can ask Denise is if they're like in a builder contract or something, we're going to be transparent and say, you may not be done in 3 months, or they come to us late, right? Because we don't want to set those unrealistic expectations, because that will not be a good situation for anybody, for you, for us. The client's going to be under stress. So we want to make sure we, set a realistic expectation. But that's kind of how it would look, right? So you would just because you can give them our information, but here's doing this years and years and with clients, they don't call, they forget to call, they forget your name, right? And now we're fixing their credit. Their credit's good to go. They're at a party and they're into another realtor and another, they have another realtor, right? So the form is the way it works the best. Not only that, let's say they don't enroll now. And let's say they come back 2 years later, because we give them seminars and everything, and they enroll, you'll still get notified that someone that you referred enrolled in credit repair. And now guess what? Now you can conveniently call up and say, hey, I know we talked a year ago or so, you were looking for a home. How'd that work out? Did you ever? And they're like, oh, I just signed up for credit repair.
Right.
So there you go. So it's a pipeline that you're building.
Right. And these are all helpful tools, guys. And just a side note, I talked to all the realtors about building their team, and the team consists of several key elements for your clients, because you're not going to be able to do everything for your client. So one of the things that you will find that you need to have a credit repair specialist on your team, somebody that is responsive, somebody that's going to get the job done, somebody that's going to treat your clients well, and then somebody that's discreet about the certain things like this. Like you're saying, it's a pipeline. We still get the notifications, and as soon as it's kind of like when you guys put a client into the MLS, you put a client into the MLS and you add a subscription on there. And on that subscription, you have the option to see when they open up your email. All of you should be clicking on that option, so that whenever they click on the email to view it, you can follow up with them afterwards and say, hey, I sent you a house yesterday. I just wanted to see if you had a chance to look at it. You already know that they looked at it. So there's some engagement there. There's some motivation there. Now, like Edward said, if somebody reached out to Edward a year ago, for whatever reason, they didn't sign up, but now you see that there's a motivation again. They reached out to Edward again, and they're about to start the process. Why are they starting that process? Well, they're probably just in a better position now. Whatever the reason is, there's movement now. There's engagement. It's a good time for you to follow up. You don't have to say that that he spoke to Edward if you don't want to, but it's a good time to just call and follow up, and your timing is going to be perfect. Your timing is just going to be just right. And we all know, like Edward said, if you're not the one that's there when they're ready, they're just going to go with whoever is there. Yep. So this is one of the awesome tools that is offered through you guys, is the collaboration and partnership of keeping our clients together and having that communication throughout. So I definitely really appreciate that. I see that they're giving you some. Sorry, I was just going to say, I see that they're giving you some questions on the chat box. I don't know if you got to see that.
Yeah, I see those. Do you want me to answer those now?
Yeah.
Okay, so there's good questions, actually. So one of it is a person to pay a certain amount to lower the balance on a credit card can hear that she or she paid. Do they need to wait 30 days for it to reflect, or can it be rescored? That's a great question. So there's two things. If your lender has rapid rescore capability, they can request that. Okay, as far as I know, there's a cost and there's some things, but yes, they can pay it. I think if they show the statement, once they show it like online, they can rescore it and do it that way. If not, they're going to have to wait until that credit card company reports the balance to the bureaus. Normally, they report every month. Okay, rare occasions where they don't, but it's going to depend on where they land in that cycle. For example, your statement date when you pay, that's not the day they're reporting your balances to the credit bureaus. They have a date that they mass export your info to the bureaus. So if they're going to report next week and you paid it today, it may reflect next week. But if they just reported yesterday and you paid it today, it's going to be a whole cycle. So it may be that 30 to 45 days. Okay. You can call your credit card company and ask them when they report your balance to the bureaus. You may even have to ask for a supervisor. Sometimes they don't, like the customer service people don't know. But a good rule of thumb is at least 30 to 45 days. If your lender has rapid rescore capability, they can do it that way also. Okay, I've seen lenders do it where a person simply show them on their app, look, here's my new balance. They plug it in, they can rescore it, and they can use that, to move forward. So that's a good question. Okay, on that, you should always pay your credit card bill at least 2 weeks before the due date, anyways. Okay, to try to get credit for that on the next reporting round. Okay. What happened with people that just came to the country and they don't have credit history at all? Is there a way to help them? Yes, that's a great question. So half of our program is us fighting on their behalf, fighting to get collections, late payments, everything. And the other half is a custom action plan we're going to give them, which a lot of time is going to be building credit or reestablishing credit. Okay. So ideally, you want to have 3 credit cards and 1 loan. Like that would be ideal. Okay. We have resources where one of them being a secured card. Okay. You can always go to your bank and get a secured credit card. But did you know that you can even be denied for a secured card? Okay.
What? I didn't know
Yeah.
that.
You can. Even you're going to give them your money. It's rare, but you can be denied. Okay.
Okay.
So when they come to us, we're going to basically send them to places that we can never say 100% legally, but like 99.9% of the time they'll get approved as long as they're not in bankruptcy. 2 of those are $5,000 limits. Okay. Now, do not, please, if you hear something, hear this. Do not confuse this with adding trade lines, buying trade lines, renting trade lines. If you don't know what that is, what it is there's companies that you will pay and they will add you to people's credit cards that will reflect on your score to boost your score. Okay. Does it boost it? Yes, sometimes quite a bit. It's illegal. Okay. Now, you can add a spouse, you can add your daughter, someone that if, let's say, underwriting asks, you're like, oh, yeah, that's so and so. But the process of profiting and selling that is illegal. And in my presentation that I do sometime, I can show you paperwork from Fannie Mae, Freddie, where it can be construed as mortgage fraud. Okay.
Ooh.
One thing you'll know about credit repair, there's no magic pill. There's no magic weight loss pill. Okay. If it's too good to be true, it probably is. So if you hear, oh, we're just going to add you to all these cards, just kind of stay away from it, especially with what you all do. The trade lines we're talking about is that they're going to go apply, right? They're going to go on their own. It's going to be a primary account that they're going to get approved for. Okay. So if they add that, they can start adding those cards real quick. There's loans. What we mean is we don't want them to go get a car loan or something like that that's going to mess up their DTI and all this. It's almost like a savings account that reports as a loan. So you're putting into like $25 into a savings account every month and it's reporting like a loan. And you can have a credit score if you don't have anything in 6 months. That's literally what it takes if you don't have anything. It's like 6 months of history to develop a credit score. Okay. That's if they like don't have anything at all. Okay. So yeah, so we help people with that a lot of times because a lot of times we're taking off negative items. They don't even have credit anymore. We need to rebuild it.
Okay. And I'd like to add to that. That's something, again, with your clients, at least for myself, I'm very big on value adds. So when it comes to my clients, I like to inform them and teach them more than what I need to, honestly, whenever we're going through the home buying or selling process. I want them to have as much information as possible for the future. Will you work with them again in the future? Maybe, maybe not. But we're in a position to also teach the community, and credit is one of those important things to teach. And so, like Edward mentioned, their sole purpose is not just to go and get rid of all of these people's late payments and derogatories and collections. They actually teach their clients how to build their credit. They teach the clients what is credit, and what's affecting you and how is it affecting you, and how do you not make the same mistakes that you made before to position yourself like this. Because at the end of the day, guys, whether we like it or not, the credit system, like Edward said, it's kind of like a game. There's rules in place, whether we like them or not. Let's just learn what those rules are and learn how to win at this game of credit. Now, we're not going to get into this today, but credit is something that we can leverage immensely. Right now, we're only talking about our clients, but in the future, us ourselves, we can leverage credit ourselves. Maybe on another interview, we can do something where we talk about business credit. You all are business owners now, so you could leverage getting business credit and getting funds to help fund your business. What if one of you guys wants to become a broker in a couple of years and open up your own brokerage? What if y'all with your significant other want to open up a bakery or a car dealership or whatever the case may be? You need credit. This is something that everybody can leverage. So keep that in mind, that when you send your clients to Edward and his team, they're not just going to go and say, hey, this is how much we charge, sign up. all right, I might get you results, I might not. No, it really truly is a learning process. Everybody that's gone through the program with you guys, I mean, I've heard great, excellent things, and like I said, I've done it myself. I see it.
And that's what makes us different. We're one of the only industries where repeat business is not good. Right? Because
Yeah.
if they're coming back, we're like, well, So one of the main things, see, there's a lot of credit repair companies, and there's great ones. Don't get me wrong. We're not the only one, right? There are bad apples in our industry, quite a few. We're trying to change that. But one of the things that makes us different is, first of all, my team, we do have a great understanding of credit in relation to the mortgage industry. Okay. When they come to us, we're going to give them a full audit and analysis of what they need to do. You're going to get copied on that. Okay. Every time we update their file in 40, 45 days, you're going to get copied, and it's a full analysis. So we're going to be a coach that holds them accountable. If we see new inquiries, if we see credit card balances go up, you're going to know. They're going to know also. And we document all that. So we're going to be on them. We're going to be like, hey, great job on this, but this and this. And that is super important because let's just face it, the clients, if they get frustrated, you guys have probably heard the buyers are liars or different things. They're going to say, well, this person didn't do or you didn't. And it's important that we just keep them accountable and say, hey, well, this is why this is happening. Your credit score doesn't change just because. Okay. If it went down, went up, there's a reason. It's a mathematical formula. Okay. So if we removed a collection, but you maxed out a credit card, hey, that your score may go up, may not, may go down. I mean, it's going to depend. So we're helping them for you all also. I had a client the other day that we fixed their credit. They were getting ready. We were getting ready to close it up. We're going to send them back to the realtor. My processor came in and said, hey, tell Melissa to call the realtor because they've got 3 credit inquiries at one of these furniture stores, like at Cons or something. So we don't want them to go buy any furniture yet. So even though that may have not impacted their credit too much, that may affect their DTI and not qualify. So we called them right away. And then the client was like, oh, I thought I was good to go. Because I'm like, no, don't. So we're your partner also. Yes, incredible. Right. We're watching out for a lot of those things. Because this is the thing. Our goal, again, is to get them into a home. Okay. It does us no good if we do all this and they don't get to that goal. Now, we can't guarantee it, right? Because again, we're like a fitness trainer. I always tell them, you can have the best trainer, but if they don't follow their part, like if you don't eat right, well, we're going to get some results, but not the best. So that's what makes our program, that's what I think is the best part or the value of our program, is that we're partners together and we're not only fixing the negative account, we're trying to get that file where they can qualify. We're keeping you updated and we're keeping them accountable. Now, we're not, I'll be transparent, the least expensive. Okay, we're not the most expensive either, but a lot of these online credit repair companies, yes, they'll do some things, but we're talking about clients that their end goal, majority of the time, is to purchase a home. There's things that have to be done at the end of the process before they go to a mortgage lender. You can't have open disputes, dispute remarks, things and like that. If you'll get kicked out a lot of times, straight off the bat, off of the automatic underwriting. Okay, so us having an understanding of that is why 90% of our clients come from realtors and mortgage lenders. You'll see us on social media and things. That's more branding. But our client, this is our ideal client. So you all know who our ideal client would be. Is someone usually that's looking to purchase a home or something has happened where they really need their credit now. It's usually a home, right? And it's not someone right now that's struggling to pay their current bills or that things like that. It's someone that, you know what? Things happen, life happened, whether it be divorce, job loss, and now they're a little back on their feet. They're trying to get back line. And we're just trying to get them where they can qualify instead of them waiting 7 years for all this stuff to fall off.
Right.
Okay. So because a client that can't meet their current financial obligations, credit repair is not going to help them because they're going to get a late payment next month.
Yes.
Because they can't afford that, right? So we also will turn down clients for if they don't qualify, or if they come to us and we still think they're borderline, I'm gonna tell them, Denise, have the lender run it, because a lot of times you get 2 clients, some that think it's way worse than it is and it's not that bad. I got clients, and these things were like 15 years ago. They're like, that's not on there forever. I'm like, no, go. You might probably qualify now. And they've been renting for 10 years. And then some that think their credit's great and it's not, right? So professional consultation is always recommended, right? At the very least, we're going to tell them what's going on.
Right.
Okay. If they just have, let's say they have a $2,000 credit card and it's maxed out. They're like, oh, I can't pay $1,800 to get that down. Okay. Well, we can give them the source to go add that $5,000 credit card. And guess what? That card's only going to cost them like $95, $150, $200. but it's going to have the same effect as paying down $1,800 because now you added 5,000 of available credit. So now they have the 5 plus the 2 they have, but their balance is still only the 2,000, right? So now instead of being at 100%, they've dropped down to whatever that works out to. So that's why that consultation is important, right? Because there's ways that we can help them, for example, even with the utilization by adding more credit instead of, so we got to get creative, right?
What should what should we prepare them with before they go into the consultation? Do they have to pay for like the credit pool? Is it complimentary? How does that look?
If they want a detailed analysis, the credit report is $34.95. Now, if they just have their Credit Karma and want us to look over it, we can, right, and get a general idea. But we do like to pull a full credit report because we're going to give them a full analysis. I mean, we're going to go through it line by line. That's something that makes us obviously a little different as well. And at the very least, they're even going to have a full analysis that's going to tell them everything that's wrong with their credit, whether they want to work on it or not, or whatever the case is. I mean, sometimes some of the lenders will send us the mortgage report. We got to be careful with that because of privacy and things like that. But ideally, we'll pull a credit report. If not, we can at least get an idea of their situation. We know that if they've got collections, medical collection, they're probably a good candidate. Okay, so our ideal candidates are people that have those derogatories. Okay, like collections, charge-offs, repossessions, foreclosures, bankruptcies, all these major things that's going to take them years and years to eventually age off. That's where we come in. So real quick, I know we're getting close here. Real quick, what credit repair is like in a nutshell, I'm going to take like 30 seconds. When you hire us, when the client hires us, we fight on their behalf. We represent them almost like an attorney, okay? And we're going to fight for the removal of these negative accounts. Now, the way you remove negative accounts is there's a bunch of laws. There's over 200 laws that the credit bureaus, collection agencies are supposed to follow that, believe it or not, 80% of the time they don't. Okay, so our job is, let's say you have a collection and you didn't pay it. It's your Verizon bill, you lost your job, you couldn't pay it. Nothing about credit repair is about lying. You can go in there and say, well, I don't think it's mine or it's paid. No, it's yours. We're not going to deny that. But we're going to go in and find issues in the procedures and laws are supposed to follow that they don't. So we're going to say, yeah, it is Denise's. Yep, she didn't pay it. But this is violating FCRA, FDCPA, whatever it may be. And you have the right to use that to try to get it removed. Okay, so that's what credit repair is.
The importance of contracts, guys.
Yeah, exactly.
The importance of contracts. It's the exact same thing. In our contracts, we have provisions. We have ways to get out of the contract legally. There's different provisions where you can file suit. And so that's basically what they go in. And they go in and they study these contracts. And is there a violation on the other person's end where we can help out this client?
Yep. And majority of the time there is. Now it's going to depend on the severity. And that's why we can't tell someone in 3 months you're going to be a 700, right? Because what violations do we find? Who are they with? Some creditors are harder. So that's why the consultation, is important. And that's why when people say you can do credit repair on your own, you guys get this, right? You can sell your own house, right? Or you don't need a buyer's agent. But is that the best? But sometimes you lose more money, right? No. By doing it that way. And time
I've tried
and
selling my own house before. I would not recommend it. Even to buy, I use a realtor. Yeah, it's just one of those things, guys. Can we do it by ourselves? Yes, we can. Will we do it the most efficient and effective way? Probably not.
Exactly. Mm-hmm. Yep. And that's it, right? So if we do that consultation, if they're a good candidate, we enroll them, we let you know, we create your portal, we keep them up to date. I tell people prepare to commit for 6 months. I mean, if it happens sooner, it happens sooner, right? There's no contract with it. We go month by month. Again, because someone might be ready in 3 months, some might be ready in 7, but you're getting those full file review every 40 to 45 days. You get an email with an attachment. You have your portal there. You have different ways that you're going to get emails from us, text from us, just some quick notifications maybe on statuses. And again, our goal is to try to get them, back to you all, and just to where you can build that pipeline. I love working with new agents because there's some new agents that have really accelerated their career where they just say, they'll be talking to someone at the store and they'll be like, oh, you guys always asking, right? If they mention something about their credit, be like, oh, you know what? Well, even if you don't, if you're not buying right now, do you mind if I just send your information? I got people that can help you out with that and see, just talk to them. And guess what? That's a lead now for you in there that maybe months down the road, because you're going to be getting updated, right? You're in our system. They're tagged to you, unless they tell us don't send Denise anything, and we stop, right? But automatically when they enroll and when they opt in, for us information, you're going to be getting updated. I've got realtors that got hundreds of clients in their pipeline from 2, 3, 4, 5 years.
Mm-hmm.
right? I just had a realtor close on a home from a client from 6 years ago,
I
right?
believe
And
it because they come out
yeah,
of nowhere. You put them in there, and I can attest to this. I'll have clients that'll call me out of nowhere, and they're like, "Hey, Denise, my credit's where I need it to be," and I'm like, "Oh my gosh, who is this?" Like I can't even put a face to them anymore. It's been so long, but that's
yep,
really cool because you have your partner working on what they really need to work on because they can't buy a house as long as their credit's not at a certain place. So you all are doing your thing, and then when they're ready, I mean, that's another thing that I think you guys constantly give them, that motivation of like, once we get your credit where we need it, you can go and apply for that mortgage loan. You're gonna, our goal is to get you to that place where you can qualify. So for them, it's part of the home buying process. A lot of times it's just the first step for a lot of people.
yeah, yeah. It definitely is. And like I say, we've got different plans depending on, excuse me, on their situation and everything. We help you kind of pre-qual these clients sometimes. I'll be real honest with you guys. If they can't afford credit repair, they might not be in the best situation to even buy a home. So we help, because I used to have some new agents too out showing houses stuff. I'm like, did you know they don't have a job? Or like they didn't even ask that yet. Or did you know this is going on? I mean, they can't pay their credit card bills right now. They're not going to be able to for this. So that's why you want to build that pipeline. Things change.
Mm-hmm.
You get clients back that, hey, they got that job, they finished school, they did something. Now they're in a good spot. A big misconception is, you know, uh, poor people have credit. You know what? I have some clients that make very good money have bad credit. And I've got people that
Yes.
make minimum wage that have perfect credit. Okay. Your
Yes.
credit, your income has nothing to do with your credit.
Mm-hmm.
Nothing at all.
Mm-hmm.
Okay. Your credit just says if you can qualify. Your income is going to see what you can qualify for. That's where we get into DTI. And another thing, guys, we're familiar. I don't know if you all know, but I briefly was involved with Keller Williams and ran a couple things there. My wife was a realtor. She no longer is. She's actually in nursing school now. So I've been involved with real estate. I do a little bit of real estate myself. And what I mean by that is we're going to take into consideration, for example, a client comes to us and says, my lender said to pay off this car loan. We need to find out why. Because if you're trying to pay off the car loan to improve your credit, it's probably not going to. Okay, believe it or not, paying off a car loan doesn't. But the lender may be saying pay it off because of their DTI, like they need to get rid of that $500 payment,
Mm-hmm.
right? Because they got to. So then that's where you need to say, oh, okay, that's why. If the lender thought that was going to raise the score, you may say, hey, no. What you need to do is take that money and lower this credit card balance or do this. So it's
Mm-hmm.
important that your credit specialists have an understanding of the mortgage process also. Remember,
Right.
this our goal is to get them into a home. That's why there's not a lot of, I wish I could give you guys a lot of like, to increase their credit, just do this. But there's so many situations that's why that consultation is important. Because we
Mm-hmm.
want what might be good for one may not be the best thing for the other person.
Agree. And I want to touch on something that you said, guys. So again, it's all about the productivity, the efficiency. When I first started, I know I would get a lot of clients that they wanted credit repair or they needed credit repair, but the first question was, how much does it cost? And initially, I was looking for the cheapest credit repair company because my mindset was, well, if I need credit repair or if they need credit repair, well, there's a reason we need credit and we need the cheapest one. And I couldn't have been further from the truth. What it comes down to, you guys, if you're having a hard time getting somebody to go to get their credit repair, and this is really whether it's Edward or somebody else, if they need credit repair and you're having a hard time getting them to go through the process because they don't want to make the investment of paying $100, $200, $300 for credit repair, whatever it may be, why on earth would they make the investment of purchasing a home? And that mortgage is going to be, I mean, right now, you're not seeing mortgages under $1,000. $1,000 mortgage. That's an investment also. If they really want to make that investment in the future, they're going to make this investment now. So again, like Edward said, he's not the cheapest, but he's not the most expensive. What's important is that he helps them get the results that they need. If they're in the low to mid 500s, the chances of them bringing their score back up to where it needs to be or up for the first time to where it needs to be are very, very, very low. So you would just be spinning your wheels and wasting your time with this client if you can't get them into the door for a complimentary consultation. Like Edward said, it's complimentary. They have nothing to lose. They're just going to get a free analysis of what their financial health looks like, their financial credit report looks like, their report card. If you were to tell me, hey, there's this doctor, they're really good at what they do and they're offering free consultations, but if you want a detailed consultation, it's only $35. You don't think I'd go? Yeah, why not? You have
And
nothing to lose.
I'll tell you, the people that are serious, I'll tell you that about 8, 9 out of 10 enroll. Okay, the ones that are serious. If they don't, it's because maybe they really can't afford it, and they've got other things they need to take care of before they're looking to buying a home, right? The ones that don't are we'll see the ones that aren't serious, and that's why, like I tell you all, a lot of times the realtors will say, and just so you know, like Denise said, it's $179, $199 a month. Or certain things we have different plans, but this is the thing. When the people that are serious, that are on the phone with us or in the office, and let's say it's $200, if they're really serious, they're gonna figure out a way. We come down to, is that their priority? We even tell clients that, do you really want to get a home? If this is your priority, this is what we can do. If not, that's fine, right? But when it really is a priority, they'll do it, okay? And about quoting rates and everything, like I tell the realtors, do it like when you send them to a lender. Don't quote interest rates, payment, or anything. Let the mortgage, loan officer do that. Do that the same thing with us, because we're gonna justify what we're gonna do. Okay. Once we break down the report and they're like, man, I didn't know that. They have things on there that aren't theirs, or they're like, then they're like, man. And I get clients all the time say, man, 9 months later, I should have done that 5 years ago. They've been ranting for 5 years. So tell them, you know what? There's different plans. I know they're affordable. Just speak to them. Let us do what we need to do. We'll let you guys show them homes and negotiate their deal. We'll let the lender get the best rate and all that, and we'll work on the credit. We'll all do what we specialize in, and together we'll get them to where they need to be.
Yes, definitely. So I guess that's a good point to jump into a couple of these questions that we still haven't answered. I see one from Michelle. What's the best way for a person to start a credit history? Personal loans, bank cards, stores, credit cards, and then we did answer for the first consultation, is there a cost? It's really complimentary unless they want that detailed report, correct?
Yeah. So it's free, right? We'll review their credit card and everything. But if they start asking like more specific questions that we can't answer because we don't have a credit report, we'll tell them, well, we'd be glad to go into detail with that, but we need to pull, because Credit Karma doesn't have a full report. That's why it's free. Okay. The report that we pull is a detailed 3-bureau report with all the data. There's over 300 data points. Okay. So if we really, really want to, and I'll tell you what, the ones that are really serious about buying a home, $35, it's a no-brainer for them. They're like,
yes.
Yeah, of course. It might just be us pulling that report, telling them, add this card, do that, and that's it. So for $35, now they can qualify in a month or two. Okay. So yeah, you can just tell them, yes, it's free. We'll tell them if they need to pull a credit report if they want to. If not, we can go. Real quick on that question from Michelle. If there was only one thing they could do, Michelle, have them get a secured card, a secured credit card. Okay. That's better than a loan per se. So it's kind of, and then the next thing, if they can get like that credit builder loan, then they have a credit card and a loan, because now they have a little bit of credit mix, and then eventually get up to the 3 credit cards. Okay.
I have one of those accounts and I love it. It's self-lender. And
that's the one we.
Yeah, and I love it. It's maybe it was you guys that recommended. I've had it. I do it every year now, just cause I really do. And for anybody that hasn't heard of it, you can just log into self-lender. I believe it's .com. It might be .org. But it's essentially like a savings account. So you have different plans that you can choose from. The lowest plan starts at like $25 a month. And I think the highest plan is like $150 a month. And you can pick which plan you want to go with. And what they do is they set up automatic withdrawal from your bank account. And they pull this money out of your bank account every month. So it's like a bill. And then they report that you're paying this bill to the credit bureaus every month. At the end of the year, they charge you a very small fee for the process and for the service, and you get to they send you a check in the mail for almost all the money that you saved. I think the last time they charged me like $25. It was ridiculous how little they took out. And it was like this little savings plan. And then I personally, I just automatically renew it because I think it's a great account to have on my credit. I personally am very big on building my credit also. And so that's a good one for you guys to look into for yourselves and for your clients.
Yeah. I just posted some links in the chat there. This is kind of a freebie for you guys.
Oh, yeah.
These are like general recommendations, right? Obviously, if they have an analysis, we can go in a little bit more detail because there's certain cards that may work better for certain situations.
Mm-hmm.
But if you got a client that does those 4 things there, and let's say they've never had credit, in 6 to 12 months, they'll have, I mean, the only thing they will be lacking is age. But my brother had a 750 in 8 months. Okay. So there's 3 of them are credit cards, 2 of them are unsecured. They're store type cards. Okay. There's 2 that give them a $5,000 limit. There's an application fee, $95, $100. The secured card is a MasterCard, $200 deposit, but it reports multiple times a month. Okay. And then there's that self-lender that Denise was talking about. So right off the bat, that if someone just has general questions, that's something you all can use if you like as well. But that's some of the resources that we're going to have for them. So in their action plan, we're specifically going to tell them this month, apply here. Next month, do this. I mean, it's going to be a personalized, specific action plan for them while we're fighting the collections, late payments, all, and all of those things.
Mm-hmm. And we did kind of touch on this, but I want to make sure that everybody has a very clear understanding. Everybody's credit is very different. Everybody's credit profile is very different. What one person needs to build their credit up is going to be different from the next person. So also do your best not to try to do Edward and his team's job. Don't try to figure it out for them. We don't have the tools and the resources or the education that they do. So don't try to figure it out for them. Just kind of get a general idea, more or less, of where they stand or where they think they stand. My general rule of thumb is if they're at a 580 or below, or they think they're at a 580 or below, or it sounds like they could have a 580 or below because they've talked about late payments, repos, foreclosures, they go to Edward automatically. That I will send them to Edward automatically. And the reason being is they're not borderline anymore. 580 and below, you're not borderline anymore. You're going to need a little more assistance. And at the very least, and exactly the way that you said it, Edward, is exactly the way that I tell them. At the very least, you go, you get your consultation, you figure out what's on your credit profile. There might be things on there that you don't know about. There might be things on there that don't belong to you, or the fix might be a lot easier than you thought it was. And so you really just get a good analysis of what's going on with your credit score, or your clients will get a really good analysis of what the credit score is. And then they have the blueprint to move forward. Yep. And that's it. And I would actually recommend for any of you realtors that have not met with Edward and his team before, or never gone through this process before, I recommend you guys get a consultation. It's one of the best ways for you to really understand what the process looks like for your client and to help them feel comfortable. This is one of the ways that I help my clients feel comfortable, because I've been there, I've done it, and I remind them that credit is something that's constantly fluctuating. You probably didn't learn about it in high school. You probably made some mistakes, and it's okay. Especially when they're talking to us, they look at us like the professionals, and like they a veces les da pena. They might feel ashamed about these mistakes that they've made. So when you're able to put yourselves in their shoes, just like if you've ever bought a house or you've ever sold a house, you can empathize better. You can understand what their thought process might be better. And it's 10 times easier for you to get them to take that next step, to take the phone call and set up the appointment and show up to the appointment and sit down and go through that consultation and be focused and take the steps that they need to take. with that being said, does anybody else have any additional questions for Edward? No? Okay, so if you don't have your chat box open, please open up your chat box. Edward put some amazingly valuable information in this chat box. Okay, again, this is stuff that you guys can use, should use, be aware of. Make sure you copy the link, www.submitmyclient.com. This is how you guys can get paired with the portal and start submitting your clients in there. And then before we go, how can they get a hold of you directly or the team to either set up a consultation or get some more information in the future?
Okay. So my general office number here is gonna, you know what? Let me put it in the chat here, and then I'll give you guys my direct line also. So office number 201-2604. Okay, this is the.
And Michelle's asking if you guys have service in Spanish. Yes, they definitely do, Michelle.
Yeah, we've got even a team just dedicated to Spanish. So recently started working with a lot of people in Florida. So we service Texas, New Mexico, Arizona, and Florida now. So,
nice.
Yeah, so we even have a whole Spanish campaign going on, Spanish education, things like that going on. So we can definitely help. To set up, so you can see, like if a client was to go schedule a consultation, let me give you the link directly to our like scheduling page, calendar. Now, you don't want to give this directly to your client because yes, they will schedule a consultation, but we're not going to know who it came from. So you as a realtor want to use a submitmyclient.com. That's not for your clients, okay? That's for you to save on your phone. You put their info in, and then we'll set up their consultation. If you wanted to set something up, and just so you can get an idea what it would be, if you click on that txaa.as.me, that takes you to like our booking calendar where you pick a time, you answer some questions, and that's how like someone that just came off our website would schedule a consultation, okay? But if you just save that submit my client and just start people in there, your pipeline's going to grow and you'll get people back, okay? Even if you get one back. What's the average home price right now, Denise? 170, 60? I don't know if it's changed.
I think we're close. We're probably about to hit 200,000.
When
We're probably closer to like 195, 190.
Yeah. So what's, you know, your average commission? I don't know, back then it was maybe 3,000 or something, but just think about just getting one back.
Yeah.
You know, and it's no additional money out of your pocket. You're already paying for these leads in one way or in another, right? In your marketing or whatever.
Sweat equity.
You're going to get a better ROI because you're already, when I ask realtors, what are you doing with them now? Well, they're not doing anything. And believe me, because I give classes to lenders and everything, even your best lender, even your friend have clients that they're just like, oh, sorry, like they're busy, right? They got other ones.
Oh yeah, especially lenders right now, guys. Lenders are real busy. They don't have time right now. I'm sure even the ones that want to, they just don't have time.
Exactly. Okay. So we're here. That's the, you can call up there to my office. I have, it's me. I have a couple consultants. My brother just came on board as a credit consultant.
Wow, nice.
Yes, and Ashley's our head of customer support. So you'll probably, Ashley's one of the ones that you'll speak to probably a lot if you're trying to get client updates and things like that. When they get a consultation, they'll be speaking to me or one of my consultants. And then obviously we have our processing team in the background and everything. So we're not huge, but we're not your mom and pop either. I think we're just about the right size to be able to service you and your clients the way we need to. I've purposely not grown at a faster rate, even though it might be better financially for me. One thing that I wanted to do, one of our like key cornerstones is that we're not going to sacrifice service or customer service for money. I mean, I've been there, done that. And, you know, we're really, really trying to help these people. If we can all make a good living and everything at the same time, well, great. That's how you all are, right? Or I hope most realtors should be, you know, and that's the way I run my business. So, you know, anything you guys need, feel free to reach out. You've got our office number there. You've got the link to send over the clients. You'll see the process once you submit a client of us reaching out, keeping you updated if they enroll. If you're interested in a consultation for yourself, you can go to the calendar and schedule one. But just, you know, just make it part of your process. Just like you have your appraisers, your mortgage lender, your warranty people, insurance people. Just make us part of the team to where you know you've got someone to go to. If they've got credit, I know who can help you, and just build. You're just going to provide more value to them. I'll tell you what, guys, the people that you help that had a 500 credit score, that have been renting for years and years, that thought that they were never going to buy, and we fixed their credit and you sell them a home, they're your biggest referral source. They're the
Definitely.
most grateful, and they're your biggest referral source. Trust me, when anyone has anything, they're going to tell them, go to Denise, her and her team, or whoever, they're going to help you. I thought I could. And that's how you start. I've got realtors that do no marketing, that started off just with this, and now they just built their client base and they work off of referrals.
Mm-hmm.
Do any of you know Hilda Guevara by any chance?
Mm-hmm.
Okay, I've known her for a long, long time, and she started with that, really. Referral. Now she gets a ton of referrals, and it's mostly it's a lot based off of that. She just made it part of her system. They mentioned credit, like she would just send me people all the time, right? And then she built up that pipeline
Mm-hmm.
after a while, and it built. And I like mentioning her name because she was one that was, she has like a real strong Spanish accent, right? But it just goes to show that that didn't hold her back. She built up that portal, and now she can get to a point where, and you all will eventually get to where she can even get a little picky with clients and how, if they're serious or not. So if you guys are a lot of new realtors, you don't have these big mega agent budgets maybe or something to be doing these crazy boomtown and paying for these leads. Just start with the ones you have, and those will multiply. Provide the best service you can to them. Because I also, yes, it's credit, but I'm also like a business coach, and I help small businesses and entrepreneurs. So if you can just start there, put in the time now, put that work in, and it'll come back, tenfold later. If you just genuinely help some people, provide them with good resources, it'll all come back.
I agree. I have one more question.
Yeah.
One of the things I love about you guys also is that you are local. They're local. They have an actual office here. Are you guys still meeting with people due to COVID, or are we doing everything virtually?
So one of my employees actually got COVID and
Oh,
we quarantined for 2 weeks. So we're probably going to open up appointments, in-office appointments next week, but we are seeing people virtually. And believe it or not, when COVID happened, we didn't have to leave the office because we were considered essential. We did leave for about a month way back in March. And more people are getting comfortable doing virtual.
mm-hmm.
So we actually went from like half and half to like 90 being virtual now.
Yeah.
So just refer them over. We'll explain it to them. If we have a couple clients that insist on coming into the office, then we'll try to accommodate as much as we can. But most of the time, just a virtual meeting or over the phone, and once we explain it to them is enough.
Okay.
Okay? But we are local. We have a physical office. We're here on Lee Trevino, Vista del Sol at the Chase Bank. We used to be downtown, so that's where our physical office is. But if you've got clients anywhere in Texas, or you get leads anywhere, around Texas, we can help them. You might be able to make a referral. I don't know if you send them to another realtor.
Yeah.
But yes, guys, anything we can do to help, reach out to us if you've got questions, whatever it may be. Try to get them into that consult, and we'll do everything we can.
Awesome. Thank you so much, Edward. It's always such a pleasure talking to you. We can talk for hours because this is something we're definitely both very passionate about. And more than anything, I just want you guys as realtors to know and understand, regardless of whether you're a realtor today and not a realtor in 10 years, 5 years, 3 years, credit is super important to our lives as adults. And so it's really important for you guys to have a pretty good understanding, a decent understanding of credit. And in turn, it will help you be able to help your clients better. And like Edward said, the better service you give your client, it's going to come back around. It's going to come back around tenfold. So I really appreciate you guys coming and logging in and being active with your continued education. I know some of you are not brand new. Some of you have been in for a while, and you're showing up to these trainings and these meetings and just, keeping your mind sharp. That's really admirable of all of you. So I appreciate all of you guys showing up. I appreciate, Edward, you giving us the time. I know you're very busy and running a great and successful business. I wish you all the best this year and years to come, and we'll definitely set up another one where we can get a little more detailed with maybe like the business credit or something of that sort.
Yeah, definitely, definitely. That's one thing I'm big of. I'm a student for life. I'm learning all the time. Anything, like you guys need, maybe like Denise said, we can set something up, go more into credit, whatever it may be. And Denise, thank you again. It's always a pleasure. Thanks for having me. Anything that I can do to help you all, reach out to me, and I'd love to help.
Definitely. All right. Thank you guys. Have a great day. I'll talk to y'all soon. Bye-bye.